Welcome back to Bunnex Investment Group. In this video, we are going to talk about a simple TDI trading strategy that can actually make you money each and every day whenever you are looking at several pairs of your choice. We say what goes up must come down. This also applies to trading markets. When the market rallies, it goes into overbought or oversold state. These are points of high probability market reversal, as some of these points market makers needs to book their profits or actually reverse the whole market. If we apply some rules at these points, we'll have an edge within those particular points. This is where we apply the Traders Dynamic Index indicator. If you have been following our channel, you understand that we use the TDI as confirmation. The TDI is basically an indicator that can read market sentiment as well as volatility at the same time. This is for the purposes of those who do not know this particular indicator. It can also show us the oversold and overbought zones of the market. And in this lecture, we'll use the Traders Dynamic Index on the H4 time frame only. Here is the TDI illustration, basically having the RSI line in green, the volatility bands in blue, the middle or moving 50 in yellow, and then the signal line in red. In this particular case, we are mostly concerned with the RSI line and the volatility bands. With that, we are actually looking to see the market pierce outside the volatility bands on the H4 time frame like that. These are the points that we term overbought or oversold zones. Whenever we see these, we expect to see 1, closure of positions by the market makers, or 2, reversing of the market. Those are the two things that we expect to see whenever the market makers issues something like this. Our first step on the H4 time frame is to see an H4 shark fin, which we can say H4 shark. Our first step of the strategy will need us to observe the H4 time frame. When the TDI issue a shark fin, it means it's time to prepare for an entry, not time to make an entry. This is the condition we defined as overbought or oversold. Therefore, we will expect that when market makers change direction or temporarily reverse, we will be in sync with them. Before we move forward, please, this is to your attention. We have launched a very big program, Becoming a 7-Figure Traders program. In this program, several people are going to be changed from unprofitable to profitable traders. Make sure to be part of this particular program, because each and every week we'll have 3 live sessions, and before we start on that, everyone must go through an initiation training of trading the right way, because a lot of you are actually trading the wrong way. And in this particular program, we are actually reprogramming you to think like a professional, manage and be able to manage large capital equivalent to 7 figures as we do. Check the link that I've left in the description box below for you to sign up to this program. So, where do we make our entries within this particular strategy? Entries are made on H1 time frame. In this part, we must look for multi-session MOW. This must also be confirmed with the TDI if we wish to do so. I'll show you the examples when we get to the charts. Before we do so, please check out our free ebook. I'll leave the link in the description box below. It's actually an enlightenment of how trading, how becoming a 7-figure trader is like. So this is euro against the dollar. The first thing that I've already done is to mark the points where the H4 issued the shark fins. We've said the shark fins are points whereby the market is actually pierced outside the bands. Like in this particular case, we can see on the H4 time frame, the market went outside the bands, it went outside the bands, it went outside the bands like that. So all these points, I've already marked them, and we are going to check for those points on where we were going to make our entries on the H1 time frame. We've said on the H1 time frame we need to see a multi-session MOW with clear legs, and I'll show you where to make the entries. Let's now go to the H1 time frame to see the points. In this particular case, this was the first point that we've marked on the H4 time frame. We need to see a clear MOW which was not issued on the first particular point. In this case, we cannot say this was first leg or this was second leg or this was third leg. We do not see that clearly. We need to see something that has a clear neckline for us to make an entry. In this particular case, we can see first leg was issued, the market went to the upside, and as always, we say traders are people who are patient and who can wait until their conditions are met. In this particular case, we can see the market came back to the first leg level, gave a spike and closed as a hammer. It was actually a good point of market entry. However, when you enter the market, especially at a proper candlestick reversal pattern like this one, you would need to actually move your stop loss whenever we are at break even. Like in this case, the market went 76 pips to the upside. Therefore, on the downside, maybe we had 60 pips and we were above 1 hour, and we had to close off at that particular point. It means this trade was likely going to end as a break-even trade. Another point that we've marked on the H4 time frame was this one. We had the first leg and then we had the second leg. This was a clear entry and it was actually a profitable trade because the market went our direction. Going forth, we can see this was also a sell point where we actually marked on the H4 time frame. In this particular case, we had a special type of an M pattern. We usually call this a half Batman, and it's actually a very difficult entry to trade to take. A first leg was issued, but then the second leg failed to go to the first leg level. Therefore, the only way to trade this is to actually go whenever they break the neckline. The neckline is this point, and when they broke that neckline, they actually showed us that the momentum is now in the downward direction. So our stop loss will be above structure, and in this particular case, this trade actually consolidated at our entry before going in our profit. If you had moved your stop loss, it was going to end as a break-even point. But in this particular case, we can see there was no setup here. At this point, there was a beautiful setup, which actually went our way, and it actually worked as a swing trade. We actually made some money in this particular setup. Another setup, which was a buy entry. In this case, we had first leg, and then the second leg actually came to this particular point. It was also another swing, which was held for 1, 2, 3 levels to the upside until we saw this peak formation high. So we are saying in this particular case, the first thing is to basically see a shark fin on the TDI, and then after seeing a shark fin, we need to see an M or a W on the H1 time frame. With that in mind, we'll actually have a good entry and we'll actually make money. On that note, we've come to the end of our today's video. Check out our Be a 7-Figure Trader program. The link is in the description box below.